you for joining us for another episode of the Adjusters Roundtable. We're going to discuss a valuable topic today, understanding your policy coverage before suffering a loss. Joining us today is a public adjuster with our company by the name of James Donato. We're excited to have James here with us today.
Pleasure to be here.
A little bit about James. James is licensed in multiple states. He's licensed in Florida, Georgia, South Carolina, North Carolina, Texas, and Colorado. James has recovered over $12 million in new money settlements for our clients. So James, again, thank you so much for being here with us today.
Thanks for having me. Pleasure
Awesome.
to be here.
So again, we want to go over a valuable topic we think is going to be impactful for a lot of people watching out there today. And again, the topic is understanding your policy coverage before you suffer a loss. As we know, once a claim happens, you can't go back and redo your coverage. And if it wasn't sufficient for the type of loss that you suffered, you're stuck with what you have. There's a lot of slippery slopes and landmines in policies these days. So we want to discuss a few of those things to make you aware of what to look for in your policy. We always say hindsight's 20/20 in this industry. You want to make sure that whatever you have in place is good when it happens. So some of the things that we want to talk about today that I know that you've seen in the field with some of your clients that has really been impactful to their claim, both positively and negatively, are what we call as endorsements. An endorsement basically takes the policy and either adds coverage to it or subtracts coverage away. One of the main things that we're seeing, and you've seen this on a lot of your commercial losses lately, is a roof depreciation schedule, right? Can you tell us a little bit about what a roof depreciation schedule is, James?
Yes, basically puts a timestamp on the roof based on the age of the roof. So they depreciate the value of the roof based on the age value, and that's generally what the carrier will pay out on. So obviously the older the roof, the more they're going to depreciate it and the less they will pay out. Even if they admit that they owe you for replacing that roof, there's still going to be a depreciated value applied to it.
Got it. And that's an actual one-page endorsement that we've seen in a lot of these policies that has a chart, and it shows the type of building material and then the years and then a percentage of what they'll pay. So let's say, for instance, you have a $500,000 roof, and this is actually a pretty close example of what we saw here recently on a claim. And this roofing material on this schedule at 20 years old, which is what the age of the roof was, the insured can only recover 20% of the value of that roof. So even though the insurance company agreed to $500,000 in replacement of that damaged roof, because of this endorsement, they would only get 20% of that, even though the insurance company agreed that they had $500,000 in covered damages. Does that sound right?
Correct. Yes, it's something where the insured ends up having to make up the difference because the policy is only going to cover so much. So it doesn't really leave them in a place to become whole again, and they usually have to figure out the difference on their own.
Got it. And that can be a substantial difference. So, we've seen these endorsements sometimes maybe a few $100s to maybe $1,000 policy premium credit. And again, everybody's premiums right now are kind of going up. People are worried about costs and expenditures. So, we see on the other end, though, where maybe saving $500 just costs you $450,000. So,
correct.
It's something you probably want to be real cognizant of when you're choosing your policy coverages and meeting with your broker and your agent to discuss those endorsements. And generally, where would somebody find these endorsements in a policy?
It's usually listed towards the back of the policy. In the jacket of the policy, it will list the endorsements, but the actual endorsement usually gets listed towards the back end of the policy. This is why a lot of times when you review your policy, you have to make sure you have a full certified copy of that policy. Otherwise, a lot of times the carriers will just send deck pages or a couple of the pages that don't give you the full synopsis of what the policy states.
Yeah, and a lot of times people don't even get their policy until a couple of months after the policy has been bound and they've paid for it. So then you get this policy and you're not thinking, let me look at page 57 for this little scheduled endorsement. I've got coverage for my building, I've got coverage for my home. A lot of people don't think about these endorsements until a loss actually occurs. So we certainly encourage people to thoroughly vet their policy and discuss that with their agent. So another issue that we're seeing in policies now is that there's a lot of policies being issued under surplus lines coverages. So there's actually a difference between surplus lines carriers and domestic carriers, which are kind of governed by the laws and rules of the state. But surplus lines carriers are like the wild, wild west. But we're seeing a large push from different departments of insurance to get more surplus lines carriers because they're more competitive rates. But what's the difference in the coverages that people should be aware of for a surplus lines policy versus domestic?
Yeah, so as you mentioned, domestic policies are governed by the state of Florida, so they have to follow rules and regulations that the state puts in place, as opposed to a surplus lines policy is usually, like you said, a little more like the Wild Wild West. They don't follow the same rules, they don't follow the same structures or the same guidelines, so there's a lot more kind of staying on top of them to keep them accountable for what the policy or what the insured's purchased in that policy.
Yeah, and we've also seen that with a domestic carrier too, if they go insolvent, if they go out of business, which has happened to a lot of insurance companies over the last 10 years, if you have an open claim with a domestic carrier, there's usually a backstop. It's like the FDIC. In Florida, they have something called FIGA, the Florida Insurance Guarantee Association. So if your insurance company goes insolvent, that entity steps in to continue processing your claim. Whereas on a surplus lines carrier, if they go insolvent, that's it. There's no more money in the pot, right?
Right.
As we understand. So that's another thing to be cognizant of, when you're choosing that, a surplus lines versus domestic. So make sure you're reaching out to your agent or your broker and asking those questions, because like we said, those surplus lines policies, we've seen all sorts of things being thrown in there because they're not regulated by the state like domestic carriers are. They can literally throw a bunch of very strange things in there. We've seen these roof depreciation schedules and all sorts of things that limit the scope of what can be paid out when a claim actually happens. And
Correct.
We've seen $1 million claims, only have $100,000 in payouts after all these limitations and exclusions, because they literally can throw whatever they want in there for the most part.
Right.
So,
Right.
definitely want people to be aware of that. There's a situation that you and I were discussing here recently. You have a commercial client, I believe it's on the west coast of Florida, where they had an original adjuster's report sent to them after they suffered a loss from a recent hurricane. And I found this very interesting when you and I were talking about this, because the report that we were given had about 500 line items in it, but about 300 of them had a strike through on it. It looked like those items were redacted.
Mm-hmm.
So, as I understand between our discussions, that an original estimate was approved by the insurance company, and then a third-party entity was brought in. And based upon that third-party entity's determination, the original, as we understand, experienced large loss commercial adjusters approved estimate was basically torn to shreds based upon this third-party entity's report, to the point where your client now was left without any payment because of all these redactions that were made by this third-party entity. Can you tell me a little bit about what happened there?
So with that particular client, like you said, it was a commercial property. The carrier came out, they made their assessments, and then they sent out a second expert to come out and look at the property, who then, put forth his opinion that all these things were not covered, even though they had their adjuster go out and write up a full estimate that they approved, but they then sent in a new expert that came with a different opinion. And this left the insured upside down, because obviously no payment was issued, they had a high deductible, and it just left them in a position where they weren't made whole, they weren't getting properly indemnified. And the way it was observed was they were providing coverage on one end, but then the opinion of the expert would just basically remove it.
Mm-hmm.
So it was just something where we feel that it wasn't addressed properly, something that we can go back in and assist them with, reevaluate, potentially get out other experts to help verify and substantiate the damages that we see,
Mm-hmm.
and potentially move the claim forward to get them properly indemnified.
And it seemed like, based upon our conversation, that this expert that they sent out, and I say expert with quotes there for sure, really focused on the big ticket items, but left a lot of items unaddressed in their report, right? And so those were items that, as you walked that property and did your inspection, very much should have been included in this engineer's report and weren't. And I just find that strange that, it seems that these third-party entities that are consistently coming out to review these claims and provide reports tend to kind of focus on one or two things, but then there's a lot of items that are left unaddressed. But based upon your inspection, it seemed like that was a large amount of items that, could make a substantial difference on the claim. So is that, as a public adjuster, I mean, it seems like that's a huge value that you would bring to the claim. they try to isolate and focus on particular things, it seems like, but there's a whole scope of work to be done there, right? So
Correct.
how do you kind of step in those shoes and evaluate a claim like that to make sure that everything is getting addressed and it's not hyper-focused on just like a couple of roof or like items like that?
Good question. So generally in all policies, the onus of responsibility falls on the insured to prove the damages, not the insurance company. So by hiring a public adjuster, you're hiring somebody to come out that's going to be thorough and detailed and look into every little nook and cranny of the property and the building that's covered under that policy. So we go through thoroughly, and we were able to look at this building, like you said, from the roof all the way down, from the exterior into the interior, so all facets of the building, and we're able to find substantial damages that were missed by the carrier, that were missed by the expert that they sent out, and were very obvious to be wind damage from the storm.
Okay.
This was, one of the values that obviously hiring a public adjuster brings to the table, because we're able to really do thorough inspections and look at every little detail that usually will get left out, like you said, when the carrier comes in and gives their opinion of the claim.
Sure, and that actually really rings to me. Again, having worked in this industry for 25 years, the first 10 years of my career, I worked for insurance carriers specifically. And I recall specifically that when third-party entities would be brought out, whether they be engineers or maybe like roofing consultants or things like that, generally they're tasked with a specific scope of work to do. So if an engineer comes out, a lot of times they're going to have a sheet that tells them, hey, go opine on the roof or go opine on the windows. And it might not even necessarily be their job to do what you do, which is walk the full property and assess all the damages. They're really just addressing what they're being told to go out there and address. Correct. So, again, I feel like insureds and policyholders out there might kind of get pigeonholed into all these reports, and they're looking at the insurance company as being the experts. But those guys are even really hyper-focused on very specific parts of a loss and not the whole totality like a public adjuster would for a policyholder.
Correct, yes. And we look at all the benefits of the policy and make sure that anything that can be applied to that loss is brought up so that the insureds do get the full benefits of the policy they purchased.
I want to talk about a few claims that you've had, some case studies in particular. And again, we're mentioning a lot about these third-party entities lately that are being brought into claims that really influence and change the value of a claim. You don't have a lot of adjusters anymore that come out to a loss with the authority to settle a claim. I talk about this a lot. In my early years working as a carrier adjuster, I actually had the authority to come out to a loss, assess the damage, review the policy, write an estimate, and actually cut a check on site to a policyholder. And that seems so distant now, right, on how things work. And primarily, you don't even have a licensed adjuster that comes out a lot of times. It's these third-party entities, and they report back to someone who is licensed, who sits behind a desk 10 miles away, 100 miles away, 1,000 miles away, looks at these reports, takes those opinions, and then makes a claim determination. So there seems to be like a disconnect there. And in a particular claim that you had here recently in South Carolina, as I understand, you were representing a church in South Carolina. You were able to recover an additional $780,000 and some change for this client over and above the original offer made by the insurance company. Is that correct?
Correct.
Yeah. Great job, by the way. That's
Appreciate
a phenomenal result. A little bit about that claim, too, and a little bit about that loss, to be specific. So as I understand, it was a hail loss that ultimately you recovered money for damage to the roofing system, the HVAC windows, exterior brick facade, and interior water damage to the property. There was also a tree that fell on one of the buildings on the site and damaged a significant amount of contents. The insurance company, initially via their expert and consultant, only extended coverage for the roofing system and some ancillary items, right?
Correct.
Can you walk me through kind of your process, how you went from just those limited items to a much broader scope that resulted ultimately in a $780,000 increase in payment to your client?
Yes. This was an excellent claim that I was able to assist with out in Rockwall, South Carolina. This was post-hailstorm. They had a huge hailstorm. It was about 4-inch hail. So this was like baseball, softball size hail that just started dumping out of the sky. So obviously this caused substantial damage, not just to the church, but the whole area of Rock Hill. And with that, the roofing system was definitely damaged. The HVAC systems were damaged. The exterior of the building was damaged. The interior, we just found damages all over the property. The insurance company only generally accounted for the roof. They just tried to account for the roof, and it was undervalued. It was obviously depreciated. It wasn't enough to really even cover the roof. So upon the pastor reaching out to me and inviting me out to the property, I was able to do a thorough inspection, look at every detail of this property, look at what they accounted for and what they did not account for, and was able to compile a substantial estimate that was reviewed. We got our own experts out to help verify and substantiate the damages. And ultimately, we just kept pressing, and we kept pressing and standing in our position. And the insurance company, eventually came to us and said, listen, we want to work with the consultant, let them review your estimate, and we're willing to make a payment. And ultimately, we got them to come to the table and issue out a good payment for the insured.
And great job on that. And kind of touching on something you just said there, the insurance company was, again, kind of relying on their consultant. And kind of looking back at this claim and some of the discussions that you and I had about it, if I recall, the building consultant that they sent out to rely upon was kind of scattered to the wind in terms of he was working all over the U.S., had a full plate, and ultimately it really seemed like to me that he was leaning on you to assist him doing his job, and that ultimately kind of is what led to a good result. Can you kind of elaborate on that for me a little bit?
Yes. Like you said, the consultant was getting sent all over the country for different reasons. So he was very busy at that point. And then, obviously with that, we wanted to keep the pressure on the insurance company as well as their consultant to get this done so that he didn't get lost in the wind with 20 other issues going on around the country, and that this was getting addressed. We do prioritize in that manner to try to ensure that the people that we assist, that things get handled in a timely manner, that it doesn't get lost because of other events or other issues. So because of that, I was able to communicate with him directly, and he was able to he asked me to review the estimate that I had put together and made some adjustments. So with that, we were able to kind of make his job a little bit easier.
Sure.
We were able to get the insured properly indemnified, and it seemed to all work out positively.
And we do hear that a lot. We hear a lot of insurance company representatives that are actually thankful for the work product that we provide because it actually makes their job easier and actually expedites the process. I can even say this in the latter years of my career working for insurance companies, they overwhelm me with work a lot of times. And if somebody could help me, expedite my work product, and get on the page a little bit faster to help indemnify the insured, that definitely made a difference. So, that definitely speaks to the fact that sometimes people have a perception of hiring a representative to quote unquote go against the insurance company as adversarial. We actually see that very different. We see our role as, a lot of times expediting the process and getting the other side the information they need to see things from the policyholder's point of view to help things go faster and get the claim to where it needs to be. And again, we talk a lot about this with post-loss obligations too as well. It's becoming more and more the responsibility in policies and in statute and in case law for policyholders and insureds to be the ones who are presenting their claim to the insurance company. In fact, we've seen a lot of policies where your claim can get denied if you don't provide this documentation and certain things to the insurance company within a very short amount of time, sometimes as short as 30 days, right? And so having a consultant who could come in like a public adjuster, assist you prepare that documentation, that information, get it to the insurance company in a clear and concise manner, can actually expedite your claim and get you to the front of the line a lot faster to get paid. Does that ring true?
Yes, it does, absolutely. I say the same thing. We don't work against the insurance companies. We try to work with them. I always say this to the adjusters, the examiners I work with. I'm not here to go against you. I'm here to help. We're here to help our mutual client, which is this insured, right? And like you were saying, like sometimes post-loss or hurricane, when things are crazy and people are sorting everything out, they don't even realize that they have sometimes 30 days, 60 days to submit their proof of loss to the insurance company because it's buried in the policy and nobody's telling them.
Right.
So having an expert that comes in to obviously go through your policy, go through your coverages, and ensure that you are following all your post-loss obligations is critical, especially after a large loss or a circumstance of, where you have to deal with the situation, deal with your life, deal with everything else. And having an expert there to help you deal with some of those problems is always a plus.
Yeah, that's fantastic. That's good information for sure. And again, there was another condo association claim in Florida, I believe, that we were talking about earlier today, that, as I recall, initially the property manager had reached out to you to come out and take a look because they had several units that were damaged. I believe it was 2 buildings on this property. And they had a lot of unit owners that were, frustrated that there was water damage in the units. They were having a little bit of trouble figuring out how to deal with that, whether it was, a claim for the individual units, or there was a claim for the association, because that is a little bit tricky when it comes to, especially condo associations, who has coverage state by state. That can vary. There's generally some guidelines for that. But as I recall, you were brought out to that claim. This was shortly after a tropical storm had impacted the property as well. And my recollection of that is when you went through these units, there was kind of a consistent theme of the water damage. You did a further thorough inspection and noticed that the exterior facade, which was EFIS on this, had actually suffered some pretty substantial damage. That was allowing that water intrusion. Ultimately, you found that this was a claim processed underneath the association's policy and ended up recovering in excess of $500,000 in damages, which included the roof, exterior facades, some interior damages, and also fencing. Like, there was a substantial amount more, which at that time, this association and this property manager seemed so overwhelmed with those individual issues of the condo units that they weren't even aware of what the real cause was, which was on the outside of the building from the tropical storm.
Correct.
So can you kind of walk me through that process a little bit, how you went from, analyzing and assessing those individual units for the property manager to ultimately filing a claim and getting such a substantial recovery for that client?
Yes. And in that particular commercial claim, like you said, it was 2 condo buildings. A tropical storm had passed through. They had received substantial damages where some of the units were having water intrusion in. Initially, when you're dealing with condominiums, it's obviously there's a master policy for the condo association where the responsibility of the condo association opposed to the condo owner comes into play. So when the water's coming from the outside in, it's usually on the responsibility of the condo association. That was the case in this situation where cracks in the stucco were created from the storm and water had come into these properties. So like you said, at first it was a little bit of a who's responsible here type situation, but it ended up falling back on the association. They were kind of caught, like, didn't know what was going on because they didn't really, it was the unit holder who had kind of presented it to them. And from there it opened up the claim, and it was actually their broker who recommended to contact a public adjuster to assist them with the situation once it was presented to them.
Okay.
Upon doing that, we were able to get a full evaluation of both buildings, obviously account for everything on the property from the roof to the exterior, interior, the fences, like you had mentioned. But this was us looking at the policy and getting all the coverages accounted for that were part of that policy during that time because the claim was open, they were going through the process, and we were able to get them a substantial recovery on the back end, and they were very satisfied with the results.
Yeah, and again, great job on that, really weeding through kind of the mystery of the claim in and of itself at the beginning, because they were so hyper-focused on all these individual units and the damage, and there was mold damage that tenants or the condo owners were worried about, but they didn't see the bigger picture. And having you come in and take a step back and just say, hey, let's look at the broader picture here. Let's figure out what's going on, what's causing this, and really understanding, what policy was at play, and then how to actually pursue those damages appropriately on behalf of the association was obviously very valuable, and they received the full benefit of your services. So great job on that.
Thank you.
One of the questions that I have in thinking about the 2 case studies that we just talked about is, how did the insurance companies get these claims so wrong at the beginning of each one of these situations? I mean, to bring in an additional $500,000 on one claim, to bring in $780,000 on another claim, my mind goes to, again, it not really as much anymore being the responsibility of the insurance company to get it right as it is the policyholder. Does that kind of ring true to you in both of these situations, and can you elaborate on that a little bit?
In regards to how the insurance companies get it so wrong, I think when they come out and initially evaluate the damages, that they're just looking at it generally. And again, as we say, the owner's responsibility falls on the insured to prove the damages, so they're not there to do thorough inspections.
It's not even their requirement to do that anymore in a lot of policies, right?
It's not. So they just do a general brush. And then on top of it, like you mentioned, the policy itself, there are a lot of other coverages that baskets of coverage that will not get addressed again if it's not brought up by the insured. So, they're coming out to do a general inspection. They come out there, they look at the property, and they'll issue out their assessment to the insured, and usually something, if coverage is extended, a payment will be made. But they know majority of the times that there's still things being left on the table. This is why the insured has to go back for supplemental damages. They have that window of time frame that they can present damages that were not accounted for. But I think in a numbers game, a lot of times people do not come back for supplemental damages. They just accept what's being told to them. This is a lot has to do with the fact that they're not aware of the coverages in their policies. They're not aware of the procedures. And this is another reason why it's great to have an expert on your side that's going to help you through that.
Something that I think about a lot too is the very definition of a claim, right? So when you file a claim, you are the one that's actually filing that claim. You're noticing the entity that you have a contract with that you are claiming something, right? And the very definition of a claim is to make a request or a demand for something. And somewhere along the way, I feel like, whether it be via marketing or, social media or whatever have you, policyholders and insurers have lost the understanding that it is up to them to make that demand, to make that request. It's literally the actual definition of a claim. And people are really preconditioned now to file the claim and then sit back and wait for whatever the determination is from the party that they contracted with to give them the benefit of whatever that demand is. And so now the tide's really turning on that from what we've seen in policies, in that when you file that claim, now you have requirements to make that demand, to prove that request. And if you don't do that, you might not get the benefit of the claim that you filed. Does that ring true to you?
That does absolutely. One of the first things when I meet homeowners or insureds in general, I asked them, I said, listen, would you ever sign a contract that you didn't read? And the first thing they say, of course not. But, I said, that's a contract. Did you read that one? And 9.9 out of 10 times, no, I didn't read it. I can't read it. It's written in a way that's very confusing. So off the rip, they don't realize that, obviously it's their responsibility to present the claim. And if they're not presenting the damages to the insurance company, they're not going to account for it. How they present the claim is their responsibility. And if they don't know how to present it properly based on the terms of the policy, a lot of times they are not getting afforded the coverage that they've paid for.
So that's a great point, because we've actually seen this quite a lot over the years. And we talk about presenting a claim like that. That actually is a thing that you have to do, that you should do, that a lot of the policies require. So one of the things that we see is someone has a water loss in their home, and within 24 to 48 hours, microbial growth can begin. A lot of people don't realize that. So somebody has a water loss in their home. Let's say it's behind a toilet. 1 or 2 days pass, they see mold. They call their insurance company and they file a mold claim. And we've seen claims get denied because they are claiming the cause or the origin of the loss is mold, which is generally not a covered cause of loss. It's a resulting ensuing damage that could be covered under a water loss. So these little technicalities, as we call them, can really make the difference between a covered loss and a denied claim. And who's out there explaining this to insureds?
Nobody.
Another thing that we see a lot as well is the date of loss, okay? So a lot of people will have a storm come through and damage their roof, per se. And we see that a day later, a week later, a month later, they start to notice water damage to their ceiling. Sometimes it takes time for roofing damage to materialize into interior water damage. It's got to go through the decking. It's got to go through insulation. It's got to go through the drywall. And a lot of people aren't in their attics every day to watch this progression of water coming down. We've had a lot of elderly clients who don't get out a lot and look at their roof to see if the storm from last weekend, blew tiles off their roof. But ultimately, we've seen insurance companies deny claims simply because people called in the claim for the date of loss when they noticed the interior ensuing water damage or what have you, yet the actual event that initially caused it is what would allow for coverage. So those little technicalities people substantially need to be aware of when they are filing a claim. And this is why we do recommend, and another important part of all this is that you do reach out to an expert prior to even filing a claim. If you see damage, you absolutely can call a public adjuster. You can absolutely call our firm and say, hey, listen, this is what I've seen. 1, does my policy afford coverage for this? 2, is this being presented in the right way? And that's that's okay to say that. That's a proper thing, because if you don't, like we said, if you file it on the wrong day, if you claim mold instead of water, that can get your claim denied, or at least cause massive problems to try to recorrect those things.
Correct.
So for every time that we see a denial like that, if someone would have reached out to a consultant like a public adjuster to just discuss those things prior to filing a claim, that can make a big difference. But we do see that people kind of have the impression that when they have damage, immediately call your insurance company, because you do have requirements under your policy to file a claim in a timely manner. So we're not saying delay doing that in any way, shape, or form, but obviously we still think it's very important for you to, like we talked about, know what type of coverage you have before you ever suffer a loss. Send your policy to our company. We review it for free. If you ever have a question about your coverage, that's a free consultation that we provide, right?
Right.
I would rather know, hey, hindsight's 2020, let me know right now what coverage I have or what coverage I don't have. You know, do I have a full water exclusion in my policy? What does that mean? Well, we'll explain it to you, right? If you have a plumbing failure in your house and you have 2 inches of water that you walk into one day, if you have a full plumbing exclusion or a water exclusion on your policy, you have no coverage for that. So is that something that you see often, people not understanding, you know, the coverages that they have once they suffer a loss, and being able to go back and change that? You can't do that after you suffer a loss.
Correct. I do see it often because policies generally get renewed every year. And when those notices get sent to the insured, a lot of times endorsements or exclusions are added.
Sure.
And they don't, you know, it just comes in like mail. They don't really notice what's being changed or what's being added or taken away. And they just continue to pay those premiums. Mm-hmm. So, yeah, without actually knowing the coverages you have, you are kind of setting yourself up to get put in a bad position, because at the time when you do need it and you need the insurance that you pay for, you then realize that you don't have the coverage, right? And you'd have to wait till the policy lapses and until, you know, you can apply for a new policy or go back and realize it. But that's hence one of the reasons, like you said, one of the services that we provide is free evaluations. We go through this thoroughly, and we're able to look at your policies and give you this information so you know ahead of time what you're going to be dealing with.
Yeah, and policies are tricky. You can read through 75 pages of a policy and it talks about all this coverage that it affords to you, and it gives you those warm and fuzzies, but then you get to the endorsements and maybe there's 5 endorsements in the back of your policy, and it strips away a big chunk of the coverage that you initially had. And a lot of people get confused. Well, here it says I have coverage, but here it says I don't. So what's the predominant, prevailing, you know, thought on that? Well, it's going to be the endorsement. The endorsement trumps all of that, right? Mm-hmm. So they're complicated. The contracts of adhesion, they're written in the benefit of the insurance company based upon the language and the way that they're executed. So it's something to be aware of when you're reviewing a policy for sure. James, thank you so much for joining us today and sharing those valuable insights.